Joe Biden recently came out and announced his $2 trillion infrastructure package, which is meant to boost the American economy over the long run by providing more jobs and guiding America towards a greener future. Now, the way Biden plans on gaining the money for this infrastructure package is by raising the corporate tax rate. And in this video, if you own stocks whatsoever, we're going to be talking about the implications that this may have on the stock market and if it really does have the power to crash the market in any way. So hope you guys enjoy. When we look at the stock market over the past 5 years here, a lot of people like to point at the reasoning of this bull market behind Trump's decrease of the corporate tax rate from 35% to 21%. More companies making more money, essentially leading to higher stock prices and a bull market over the past 5 years. So in this video, I want to make it very clear the implications that an increase of right around 7% in the corporate tax rate may have on the stocks that we own. So I hope you guys enjoy. When we look at an example here, this is what we have today. Assume a company makes $100 in earnings before taxes. After all expenses, they're left with $100. Now, they pay a roughly 21% corporate tax rate on that, which leaves them with around 79% net income, right? They pay around 21 bucks in taxes from those $100 in earnings before taxes. Now let's assume this company is trading at a $1,600 market cap, or we can consider this maybe a $1.6 billion market cap with 79 million in net income. Either way, that gives us a PE ratio of around 20.3, right? So let's assume that this company is currently trading at a 20.3 price to earnings ratio. That is what the market thinks is fair value for the company. Now, let's assume Biden comes in and raises the corporate tax rate, right? So we have $100 in earnings before taxes. The corporate tax rate is increased now to 28%. So now we're paying a little more taxes and getting a net income of $72 million. Divide that by, or rather take a market cap, that same market cap of 1.6 billion, divide it now by 72 million, and you get a higher price to earnings ratio of 22.2. So that is right around a 9.7% premium that you were paying beforehand, even though the stock didn't move whatsoever. So if your question is, does this potentially create a crash in the stock market? That answers your question. Unless you think a 9.7% move will crash the markets, it probably won't. Now, when we look at this potentially in a bit of a scarier scenario where the tax rate gets increased from 21% all the way up to 35%, what we had at the beginning of the Trump administration, things get a little bit, foggier. Picture $100 in earnings before taxes. Then we apply a 35% corporate tax rate onto that. Then we're left with net income of $65 million. Again, take that same market cap of 1.6 billion divided by 65 million in net income, an even higher price to earnings ratio of 24.6. Now this is where things get a little scarier, guys. Now we're paying a 21.5% premium on the stock that you own despite no movement in share price. Now, will this happen? Will the corporate tax rate increase to 35%? Most likely not. But could it happen? It definitely could be a possibility, and this is something that we have to watch out for, guys. Although this increase of corporate taxes to 28% may not, create a huge movement in stocks, at least in the next couple of years here, an increase to 35% would be a little bit worrisome. And anything above that, tighten your seatbelts because we'd probably go on a bit of a roller coaster with stocks. So, given this, let's look at some examples. I really want to make this very clear to you guys, the potential implications that this has on stocks. Let's look at a company like Palantir. This is a software company, a lot of people are talking about it, and, I think it's a phenomenal business and will be a phenomenal business over the next few years. We have seen a downtrend in the stock market overall over the past few weeks, month plus, due to fears of inflation. And a company like Palantir, a tech company, has sold off substantially, nearly 40% in that time frame. Now, when you think about it, if the percentage premium that we might be paying if the tax rate gets increased is 10%, is part of that 40% just pricing in this increase in corporate taxes? Not just Palantir. Let's look at another tech company like Tesla, for example. It's bounced back a little, right? But, is part of this negative 25% move that we've seen in Tesla just pricing in that corporate tax rate? I mean, I don't think it's too worrisome for a lot of these tech stocks. Now, where I do find a bit of worry is potentially with a lot of the value plays. If we look at the Dow here, we've seen, essentially no real correction over the past month, and we've actually seen stocks trend higher in the value space. You look at like a Disney, for example. It's been essentially flat despite a lot of the tech stocks falling dramatically. So what could I see potentially happening if this bill does get passed? A lot of value plays that have done very well over the past few months may see a bit of a downtrend as, it essentially means less profit for the company as, they price that in. But I think a lot of tech stocks that, you and me, I'm assuming, are involved in may not get hit as hard as you think. We can look at a stock like Peloton, right? The stock has been crushed over the past few months here. This was like a $170 stock. It's down 33%. So when you really think about it, how much of that is really the fear of inflation, and how much of that is really just the pricing in of that corporate tax rate? If we look at, the passing of the stimulus bill, this happened right around March 10th. What did we see? We didn't see much. The market turned a blind eye to it. Tesla's right around flat since that bill was announced. You look at Palantir, right around flat since that bill was passed, right around March 10th, or, even down. So, what do I see happening in the near future here? I feel that the market's already priced in this increase in corporate tax rates. Ever since Biden was, brought into office, I think investors already had that mindset that, what, Biden's most likely going to raise these taxes, and there's nothing we can do about it. So let's just assume that it's going to happen, and I think that's what's happened here. Over the past few months here, I think, the fears of this increase in corporate tax rates was actually kind of bundled up with this fear of inflation, which is what drew markets down here over the past few months. But just generally speaking, I'm very optimistic on the markets long term. I'm certainly not selling any positions because of this potential in the markets of corporate taxes getting increased. Does it mean shorter profits for companies within the next maybe a few years here? Potentially, right? And, I think a lot of that has been discounted already over the past few months. But corporate tax rates, they change as administrations come and go. This is just Biden's viewpoint. I don't like to get political on this channel. I like to give you guys unfiltered opinions and, just give you guys the facts and really help you prepare in times like these where, a lot of people look at this increase in corporate taxes and really overblow this fear. So I hope this video helped you out. If you found this video valuable in any way, make sure to share it with your fellow investors. Thanks so much for watching and have a great day.